Good afternoon this Thursday, June 3rd. Volatility to say the least today. But today actually followed a model that's been going on every day, whereas we rally in the night sessions sharply on weather. And then when the day session starts at 8:30, everything peaks within pennies on the opening and declines the bulk of the day double digits before, again, we recycle and do it all over again. Well, that didn't change today with spring wheat hitting the magical $8 mark. Corn futures December was over 580. The soybean contract November beans were very close to $14.40 within striking distance of their contract highs. Same thing, open and plummeted. And today's story was the U.S. dollar was rallying sharply, implying a potential double bottom, as word has it that with current economic data, some are thinking the Federal Reserve is going to start talking about tapering sooner than later. But today's big run was the Minneapolis wheat collapse of 20 cents in 1 minute. I'll show that to you. Whereas we dropped 40 plus cents off of morning highs before recovering half those losses towards the close, as the GFS weather forecast was being debunked by the Canadian weather chart. So let me show you what that was all about. Here is the GFS that came out today after 11 o'clock, showing a pile of rain here right over the dry North Dakota Northern Plains within 5 to 6 days. It was anticipated that it'll occur 5-6 days out. They were looking at a solid inch to inch and a half worth of rain could develop from this, which would be a godsend after this heat. Wheat is a grass, it'll be suffering pretty bad after we come out of this week. This could help sustain some of the crop that's still viable out there. But this next chart, this dryness that was bolted on the Canadian data, this came out at 12:30, as you can see, 13:27 Eastern time. This came out at 12:30. Well, it's interesting how we can plot these charts. This is a 1 minute chart on Minneapolis wheat, and we were kind of stabilizing after this morning's rout at around 785. And after 11:30, when the GFS came out, we dropped 20 cents from 780 and a half to 760 and a half in literally 1 minute before rebounding violently to 780. Then, of course, the market started to believe it until we got right towards 12:30. The Canadian model came out, showed no rain that far out, and so we mounted a 20-cent recovery right into the closing tick of the close. And, of course, the euro comes out later this afternoon, and if it sides with the Canadian, we will likely see another rally tonight in the wheat market, as we find the weather forecast of 99 to 100 degrees over the next 2 days in the most prime areas of North Dakota with no rain. And if there's no follow-up next week, how do we not expect new highs in the Minneapolis wheat contract? Today's bar was a vicious bar, and if we'd have closed near the lows of the day, this would be an ominous top outside day. But since the close was very close to yesterday and the opening, this is kind of a muted bar. Whichever direction you go then is the trend outside of today's bars on these tops. So intraday Minneapolis wheat chart, and we will be rolling to September. July is still the most actively traded one, and as you can see, you need all the help you can get. Open interest on the Minneapolis wheat chart is something like 28,000 contracts as opposed to Chicago, which trades 150,000 contracts. Yeah, you can see how they can go 1 minute like that. Line in the sand on this chart. Basically the 750, 740 area, because you do have a slippage factor that they can slip through. But if we ever plug this gap, it's all over with for wheat. You must maintain this area to say we have a viable moving chart to the upside yet. And I still believe that ultimately we're going to at least challenge this 848.58, the 25% retracement of the long-term charts, 848 to 868. I've been basically saying 840, 880. Something in here is where we should find ourselves to. And then we'll see the intensity of the drought if it gets worse. And on June 30th, when the USDA shows us there's less wheat acres than we thought for spring wheat, ultimately, I would not rule out something near $10 could occur. But that'll take June 30th, and that'll take this drought continuing to manifest into the 4th of July. If we look at the wheat Chicago chart, since the low that I think was a wave too low, we had a 60-cent rally. Of course, it's the tail of the dog compared to Minneapolis wheat. Broke 30 cents for a wave mini 2, I think. This will be a little wave 1. This will be a little wave 2. This is a little wave 1. And now we're going to start the wave 3 of 3. This one should be all of 60 cents off this low. If anything, it should be 90 cents. While today's low was just under 670, that would imply this next leg takes us to 760, which probably coincides with Minneapolis wheat going to 850. Corn today, After on Monday getting to 85 3/4, we have 3 hits here at the mid 80s. Ran out of gas this morning at 82 3/4. Opening was the high, plummeted, created a 2-day pullback here, but as you can see, still a lot of support here that will define this market if it wants to whipsaw around here into the summer. 540, 550 should be good support. We go to our 4-hour chart on the corn. You can just see the pockets of trading here, and now we have the moving average at 546. So again, if we were to get under 540 again, then it could be lights out and we could be doing a C-wave decline into July. But right now, rain forecasts do offer chances for the Midwest next week. But again, technical support and Chinese buying will likely return on these breaks. And our exports are going to be fabulous new crop, with Brazilian crop pretty much becoming toast now, as even ex-Stone has dropped their Brazilian yields down to 89 million metric tons for their 2 crops combined. November beans, we showed you the newsletter on this advance, which this is a bull market. There's no reason to suspect a top yet unless we get substantial closes below the purple line. We did stall out at the 786 retracement, but today's close still held previous day's lows. So as long as we're staying above 1390, 1400, this market is moving higher to new highs, even with rain forecasted next week. So there you have it. Volatility reigns. We are experiencing, pun intended, right, rain, which creates this volatility. But if we show the euro tonight not representing what the GFS tried to find in the long-term models, it's going to be another rally in the night session. But then what do we do at 8:30 tomorrow? Does the rally get sold again? Or for the 4th time, does it fail and continue higher? One thing I've learned about bull markets, on a Friday, they usually close near the highs of the week or even new highs. That could be the case, especially for Minneapolis wheat tomorrow. For Heartland Investor Capital Management, I'm Eugene Grainer. I hope you find this information useful.